Hey everybody, good morning. Welcome to a new episode of Stocks for Breakfast. We had a lot to talk about today. The market is all over the place, I guess. Really good recovery last week after the FOMC announcement, exactly as we expected. Now we're creating a different game plan with a little bit more chaos baked into the story this week. Gas prices rocketing in the UK as well as here in the US. There was actually shortages in the UK. There were lines and no gas available. So it's interesting. We've been talking about energy stocks for the better part of a month and a half. Big takeaway from that, you absolutely need to be doing your sector rotation every single day. It's that important. All right. Stick around. We'll be back in just 1 second and we're going to get into it. Okay, if you could please do me a favor, if you find these videos helpful, click down, make sure you subscribe, hit that like button and hit the thumbs up button, and I'd really appreciate it. So as with everything that we do here, everything is for educational purposes. Obviously, it's up to you to make the final decision. It's our mission to help you make better decisions so that you become the reason that you make money. So there's a lot to talk about today. We're actually going to get into Tesla today. If you happen to not have been day trading Tesla on Friday, boy, that stock was on fire. Some interesting news came out again, basically broke out of a big 3-week trading range. So Tesla's going to be a topic of today's conversation. The crypto ban in China is expanding. The Evergrande story in China is still valid. If you don't know what Evergrande is and you haven't dove into that yet, Google Evergrande, and it's going to spook you out a little bit because there's a big deal going on over there, and they're already late on a payment. Now it's the question of whether they default. That's going to be pretty interesting. So let's see. I just want to say hello to a few people. Bill W. Good morning. Good morning. Jay Patel. Awesome job, Jay, on our coaching call, our swing trading call last night. That was awesome. Kenton, that's a new name. How you doing, Kenton? Kenton Kirkpatrick. That's a tongue twister. Good morning. All right. So we're actually going to jump right into it. We're going to take a look at the market. We're going to take a look at the future. So this is kind of where we are right now, just to give everybody a sense of how we're tracking. We're actually in a pretty decent confirmed move to the downside. Just in the last hour, the futures have started to sell off a little bit, but we have a little bit of a mixed bag this morning. S&P is down. Not everything is down. So this is really the biggest thing right now. Stock futures edge up. If you didn't happen to see the news, I don't know if it was yesterday or this morning, Goldman Sachs actually has now put a buy on oil futures at $90. Pretty interesting, which it's not really shocking though either, because if you think about it, everywhere you read, Pfizer actually, we haven't bought Pfizer stock in a while because it's just pretty much been trending down since the FDA announcement. But now they're talking about the possibility of getting approval for kids. And the CEO of Pfizer actually said he's expecting the chaos that's going on in the world to be done within a year, which would be close to 3 years. That's pretty amazing for us to all be in there. Oh, by the way, I want to say happy birthday to my dad today. 80 years old today. Love you, Dad. So that's what we're looking at, energy prices. And again, I want to make sure that we keep pointing this out. You need to be on top of your sector rotation every single day, because we have actually been talking about energy stocks for easily the last 4 to 6 weeks. They were at a point where they were no longer in bearish order flow. They went into a change of trend and they started to turn back to the upside and get back into bullish order flow. I think CPE, if we go out to the daily chart, CPE is probably the poster child for that right now. And this is, if you want to take a snapshot, this is actually something I'd recommend doing. I would actually hit this. Tony, thank you. Appreciate it. If you could take a snapshot of this, this is a really important one. You can see that it's actually up 3% more here this morning, but it's not so much the actual rally in oil stocks as much as, number one, going on your treasure hunt every day, doing your trading game plan, running your scans from every different angle as possible, and you start to find these ideas early. And you can see the reason I'm asking you to take a snapshot of this is because it's literally a perfect illustration of bearish order flow, breaking the downtrend, going into that box, and then confirming a new move to the upside here. So this is really the big thing. It breaks the downtrend here. You draw a line at the previous low. You draw a line where it rallied off of the break, and then we're kind of stuck here. So this right here is really where the downtrend changed to the upside. So that's an important one because most people only like to be buying stocks. So we have this happen on the short side as well. But if you really want to dig in and start to get earlier entries, CPE is a good stock to pay attention to on that. So the other story is obviously crypto. The story is continuing from last week, where the Chinese government they literally said crypto is illegal. Now the major exchanges are starting to stop people from actually even signing up. So how is that affecting the crypto market? I know we have a lot of crypto traders here as well. Well, it's still going down. I mean, it's trying to recover a little bit this morning, and maybe an hourly chart's probably a little bit better. But it took another hit this morning. So we're actually in a little bit of a short covering rally right now. And you can see actually how we've been drawing the boxes. And that's actually a good visualization of it there on the hourly chart, where big move to the upside. We broke the downtrend. For this to have continued, it would have had to have broken that line, and it actually didn't. It actually broke down and confirmed the move to the downside here, which precipitated that 10,000 point drop. So it's actually been pretty big. Here's that 10,000 point drop. So until we see this reverse at the minimum on the hourly chart, right now, Bitcoin and specifically the short-term order flow is bearish. I will tell you this, though. That's not a bad thing. I mean, we're going to see plenty of volatility. I actually have a lot of friends right now that are actively trading Bitcoin, both as longer-term investments, but also in their everyday mixing it up. Volatility is exactly what you want. And we're actually going to have a lot of that this week in the market. We have potential government shutdown. We have the infrastructure bill on the table. We have new people in Germany. The election just changed. Angela Merkel is out, and new regime is coming in. There's a lot going on this week. So what does that mean? That means that you really need to be a good tape reader this week. You need to understand what levels matter to you. And if those levels are not there, you have to be okay with being in cash. By a mile, the biggest feedback that we get from a lot of people in the community is always wanting to have new picks, always wanting to be, and I'm talking about more here on social media than in the inside the boot camp and our mastery program, because they're kind of trained in the mastery program only to accept risk when it justifies it, which means that you learn how to build that argument, which actually takes me into another trade that we're going to talk about today. One of the top stories today is actually Roku. Actually, we get a lot of questions about Roku and whether or not Roku is bottoming or not. I don't know if people are already buyers of Roku stock. Let me actually make that a little bit bigger so everybody can see it. But you got a little bit of good news this morning where they've presented a streaming player in Germany this morning. So it's supposed to open up a new market for them. But here's the thing on Roku. We'll actually take a quick look at the stock and whether or not the stock is a buy or not. If we go down into Roku and we continue to draw this out and talk about exactly what we just did, Roku is still in a pretty obvious bearish trend. We broke down here. We went into this box. Okay, this is where it broke. And then it broke to the downside again. So that kind of takes this off the table again. And now you have to redraw the move to the downside. And we are in a potential change of trend again. So if you are looking to be long Roku right now, after this downtrend, which is just about over 2 months, you're pretty much guessing. And the only other argument that you could add to this right now is if you drop in some volume and you start to see an increase in volume. And you can see on the bottom here, if I zoom this out a little bit, it's barely over the levels. We want to see more of this kind of spikes during this move to the downside. So as of right now, Roku is a potential change of trend, not a change of trend yet. If you're looking to get long and you want to start initiating a small piece, you have to use 310 as your downside, and you're basically looking at a $10 window. So what does that mean? How do professional traders manage that when it's potential change of trend? The conservative play for Roku in this case here is to wait for it to actually form that new level where it broke the trend. And then if it breaks out of that, then you start to build a position. This way you're not anticipating the bottom. It is actually a confirmed bottom at that point. If you want to start working a position now because of that change of trend, because of the news, you have to be smart with position sizing before you buy Roku. In this point here, you have to go lower position size, wait for confirmation, get feedback from the market, and then you start to add a little bit. Okay. Let's see, Simon. UK gas shortage at pumps down to lack of delivery drivers. Oh, that's super interesting. So that's a very interesting headline, different from what you read, the more sensational stuff. So that's pretty interesting. On top of the prices going up right now too. So we want to jump into Tesla. Obviously, the big story with Tesla this morning is the button. the big button that everybody who's got Tesla right now has a choice. They're calling it the beta button, which is now you can actually hit the button, download the most updated software, and have a self-driving car. I guess the question I'll throw out there is, would you do that right now? Would you jump in and be one of the first people that has a self-driving car? I would probably try it around the neighborhood. I wouldn't do it anywhere around a major highway. But how does that translate into us looking at Tesla stock and trading it? You can see, remember, we've been talking about it for a while now. First, we needed to get above 725. We held 725. Then we needed to get out of this wider range. We got out of this wider range. And if you didn't day trade Tesla on Friday, amazing price action on Friday after the move down. So now we're looking for follow through. And what exactly does that mean? It means that at a minimum, we need to hold Friday's price action. We need to go well bid today. We need to stay above this breakout level here. And I'm actually going to move this up now because we're reestablishing a new level. And you can see the level right there. So as long as Tesla, I know it's opening up a little bit lower today, anywhere between 770 and 775 would be areas where I'd start to look to build positions because there's a lot of room to the upside. You can see here that the next level in Tesla is all the way up in this 880 level. So if we draw this out and we go in here, we're basically up there looking at 875, 880. Again, you can see where it kept getting through. So again, the battle between Cathie Wood and Michael Burry is raging on, where Tesla's bouncing. Michael bet against it. Obviously, Cathie, a lot of news last week about Cathie Wood selling some Tesla shares. But really, the bottom line is she still has millions and millions of shares. She sold a tiny portion of it. One stock that she did bet on was Twitter. We'll take a look at Twitter in a second. We're also going to talk about recovery stocks today, which are a really big part of the conversation in the boot camp last week. Again, I can't emphasize this enough. You need to be on top of your sector rotation because this is where you find opportunity early because you start to notice it's creeping up the list. You'll notice all the way on the right-hand side over here. Let me make that a little bigger for you. On the right-hand side over here, we first go and we look at the day. You start to see the day creep into the week, creep into the month, and you start to find some good opportunities before it becomes obvious. Yeah, me too, actually. Maybe around the neighborhood. Andre from Romania, thank you so much. Wow. I'm looking into AMD as a good stock. We're actually going to take a look at AMD today. Increase in demand by 500% in a short time frame. Yeah, so there's a lot to look at right now, right, Winnie? So anyway, I can't emphasize this enough. It's a big deal. Make sure that you're doing your game planning every single day and make sure that you're going deeper into sector rotation. By the way, if you happen to not be in our private Facebook group, scroll down into the description and make sure you sign up for the private Facebook group. We'd love to have you in there. You just need to click join and we'll read your answers and then we'll get you in there. So obviously Tesla's going to be a big one, going to be watching today. But the opposite side of Tesla is all of the Chinese electric vehicle stocks today. So we talked about Roku. We talked about how to build a position in Roku. You could do it now, which would be a little more aggressive, leaning on the 210 level or waiting for a complete confirmation of a move to the upside, which we aren't seeing right now, but 310 is clearly the level. We talked about Tesla. I'm looking for Tesla to stay above 770, 775 in that window to start working a position. Opening a little bit lower this morning, not a big deal at all. In this case here, a lower opening is absolutely okay with the stock that exploded the way it did on Friday. But what we're saying before is, again, in the context of sector rotation, in the context of recognizing order flow, in the context of, the cliche being in the right stocks at the right time, we notice now that the financial stocks are starting to catch a bid. Obviously, the energy stocks have been catching a bid. However, we've also started talking about recovery stocks. I just mentioned before, the CEO of Pfizer is actually a big deal because now he's saying that we're looking for the recovery to be over within a year, which again, 3 years seems like it's forever. But those stocks now have started to catch a bid. And last week, if you remember, we actually mentioned LYV, Live Nation. So you got to start to think to yourself now, we get a lot of questions about fundamental analysis and how does fundamental analysis kick into stocks. I actually want to come back on the screen for just 1 second, if you don't mind. There's a lot of talk about fundamental analysis. Is earnings per share enough? Is PE ratio enough? But the bottom line is this: you have to ask yourself a question. why do stocks go up and down? And it really comes down to there needs to be a catalyst that is going to change the amount of cash flow that the company has. Now, I think that we have a lot of entrepreneurs in our social media community. I know for a fact we do inside of the boot camp and in the mastery program. And you have to put your entrepreneur hat on. You have to have your business owner hat on. What would change the reason that that company would have extra cash flow? So if you own a business, you know, it's one thing to make money. It's another thing to have money left over after you pay everything. You pay the loans, the employees, the inventory, all that kind of stuff. So you have to start thinking when you're thinking about buying stocks, when you're thinking about fundamental reasons to be buying stocks, you have to ask yourself, what is a catalyst that would change revenue in a way that they'll actually have cash flow left over to reinvest back into the business? Obviously, the global situation that's going on now, I can't say the word because it gets caught up in filters. What would change? So we're looking at Live Nation right now and the possibility of us all starting to get back outside. I know down here in Florida, there's a lot of concerts going on right now, some people feeling comfortable. And the catalyst for this particular stock is now taking it up and beautifully sitting at a breakout level. So this stock, LYV, which promotes these concerts, will actually be in our list right now. So segueing over into some other stocks that are kind of in this recovery mode, obviously you want to start paying attention to some of the airlines. We've actually been mentioning UAL now back up to a breakout level, not quite to confirm change of trend, but definitely there. RCL is one that we've mentioned quite a bit recently. You can see RCL has now bounced beautifully out of there. So now you got to do your homework and you go into Finviz or whatever software that you happen to look up. So you go into Finviz, you go into RCL, you go into NCLH, you go into UAL, and then you click on sector. And then within that sector, there's individual industry groups, and then you do a little bit more of a deep dive. So we're kind of giving you the kind of like the path. Yeah, LUV, Greg, exactly. Exactly. Yep. LJ, I usually post that into the, obviously I give it to everybody in the community the night before. But once in a while, I post it into the Facebook group. So again, if you haven't signed up or asked to join our private Facebook group, I'd love to have you in there. I'd love to have some more conversations. You can scroll all the way down into the description, and you can hop in there. So more importantly, the biggest thing I want to talk about today is helping you create a game plan so that you understand how to find stocks that matter, how to find stocks in sector rotation. So again, I hope that you're a regular viewer of the Stocks for Breakfast show, because it really matters that we're setting up the day prior to the day starting. We talk about it all the time. Buying stocks is actually the easy part. Finding stocks and scripting out your plan is where the hard work comes in. That's kind of where we talk about putting on your overalls and digging in and doing your 1 hour, your 60 minutes to 90 minutes of game planning the day before. And then the next day you kind of wake up and you massage the list to see, okay, here's all of the ideas in the list and which stocks actually would meet the criteria. So we're going to kind of segue over to that. So we talked about recovery stocks. And for the life, we have our swing trade review session on Sunday night last night. I couldn't remember the word recovery stocks. David Farris actually kind of threw it out there. We kept calling them to get out of the house stocks. So again, when this call is over, go into your favorite scanning software, look up airlines, look up cruise lines, look up anything related to that kind of stuff. Live Nation, LYV is one that we just gave you, and start to see, is order flow obvious, and is there opportunities to get involved? So LUV is another one. LYV is one that we're looking at as a breakout. And by the way, Dell is another one that's pretty interesting, resting right at a breakout level here today as well. We're going to talk about another one that's not exactly a recovery stock, but two stocks that had a really good catalyst last week that spiked up and have now paused. They're not exactly long-term bullish order flow, but the catalyst was interesting. They spiked up and they've moved over, and you probably know what I'm talking about. We're going to be talking about Uber and Lyft. So these two stocks actually had a good catalyst. Now, both of them rallied. One, I think Uber had a stronger news story and really exploded. You can see this is the first time it's drawing the trend. And by the way, I can't express this strongly enough, and I'm just going to come back on the screen. You'll notice every stock that I put up there, you'll see trend lines, you'll see boxes, you'll see levels that matter to me. We talk about this all the time, and it's something that really matters. You need to learn to get in there and work the charts the way we're doing it right now, because you start to get a feel. And again, I hate to use that word feel, but you get a feel for the price action because you went through all of those stocks. So again, click down all the way down in the description. There's a video called the Stock Market Power Pyramid, and we walk you through the process of going from the market up to the sectors, up to the industry groups, up to the stocks. And that kind of builds the foundation of how you start to create your game plan. The more you start to game plan and decide which stocks to buy, the better you feel. And again, I hate to use that feeling, but the feeling comes from fact. By learning how to work the charts, the better you feel because you get a understanding of the depth of how stocks are actually trading. Hey, Joseph, good morning. How's it going? Rodrigo, Ford is actually an interesting one. We actually did a pretty big breakdown on Ford. And this is kind of interesting, too, because you'll see that we're working the chart in Ford. Gosh, who in America wouldn't like for this stock to pick a bid again, right? For me personally, this would be more of a longer-term investment. It just doesn't move fast enough for me to be actively trading it. But what's kind of cool here, and let me actually bring that up a little bit easier to see. Ford has been in bearish order flow. We actually were looking to buy actually this day right here. I remember this very vividly. This rally off the lows with good volume and pausing over here off of that rally. We're like, yeah, let's go. Let's start building a position in Ford. And it just kind of kept melting to the downside. And again, just to bring out the change of trend into not confirming the trend, this is kind of cool here because it broke the trend there and went down again. Broke the trend there and went down again. And now we're actually all the way up over here. And Ford just went into a box and now broke out again. So just for the sake of this conversation, Rodrigo, I actually think Ford has now confirmed the move to the upside. It's just a question of, is it a swing trade for you? Is it a position trade for you? Is the volatility something that you would be okay with trading? And actually, Winnie brings up a good point in here. The average true range is almost 40 cents, which is very low. When we run our regular scans, we're typically looking at stocks that have an average true range of a minimum of $1.50. So I just want to explain what that means. There's a delicate balance that we go as traders, and everybody on this call right now has different resources available, different experience, different education, different risk tolerance, different amount of money in their account. So when you go into a stock, and let's actually pull that up just to give everybody a super clear picture of what that means. So let's just actually use Ford and Tesla as an example. So when you go into Finviz and you take a look at the chart, you go over here, and as Winnie just typed in there, Ford right now, let me actually make that a little bigger so everybody can see that. And let me zoom that in a little bit. Actually, let me make it bigger here so you can read it. And you'll see over here, Ford has an average true range of 39 cents. So what does that mean? That means from the low to the high over the last 14 daily candlesticks, the average of the low to the high is 39 cents. So that's not a lot of volatility. So as active traders, we call that average true range the volatility. It's the amount that the stock normally moves. And that's really our opportunity to make money, as well as how we manage the risk to the downside. So that's only one part of the equation when we're building trades that match our personal criteria. The second part is liquidity. And when we talk about liquidity, I'm going to go back on the screen over here. I'm going to stick with Ford. The average volume in Ford is 59 million shares. So what does that mean? Now, for me personally, as an active trader, especially when I'm actively day trading, I'm looking for stocks that have an average daily volume of 2 million shares. That's kind of like my baseline. Once in a while, I'll trade something a little bit less than that. I'll go down to 1 million or more, but I want attention. More importantly, and I want you to write this down, so we'll make this a posted pad moment for today. You want to have institutional attention on your stock because let's face it, when the smart money, the deep pockets are buying that stock, that's what causes those large green candlesticks that we buy into, like we saw in Tesla on Friday. So if we hover back over on Tesla and take a look at that chart, that big green candlestick in Tesla and these reliable big green candlesticks in Tesla, that is smart money paying attention to that stock. That's smart money getting involved. So we see the average true range here in Ford is 40 cents. So what's kind of interesting is a lot of traders, and I made this mistake when I first started trading, you tend to gravitate towards, especially as an active trader, stocks that aren't that volatile because you want to manage the downside. And I completely understand that thought process. That makes sense, right? But the problem that we don't really take into consideration is the fact that if the volatility, which as we just described that in the average true range, is too low, there's not going to be that much opportunity to make that much money either. So you really have to mentally be okay with the volatility that you have is going to also dictate the opportunity. Now, I'm not saying to go, we'll take a look at Tesla. We'll just show you the difference. So you can see here the average range on a daily chart. And let me zoom that in a little bit. On Ford is 39 cents. And if we go to Tesla as an extreme on the opposite side, because we happen to be looking at Tesla today, is $19. So the average move from low to high in Tesla is 19. So that's a pretty dramatic difference. Now, here's the part that a lot of people mess up. And again, I want you to write this down right now. It doesn't matter if it's a $5 stock or a $500 stock. The volatility will always be the same to you as long as you manage your position size correctly. So once you have the dollar amount that you're willing to risk per trade, and this is a really big lesson, and something you probably want to watch this again, because it's we're about 25 minutes into the video. You probably want to watch this again and fast forward to it. The volatility of the stock is really not as relevant if you manage your position size based on how much money you want to risk per trade. So I'll just give you, for example, and I'll actually pull a trade in. I'm going to show you a trade that we had last week. Let me pull in our swing trades. So I want to give you an idea of a trade from last week. So I'm actually going to bring this into the screen so you get an idea of what I'm talking about. And we're going to take a look at a trade. And this is our Discord channel. This is where you get a kind of a sneak peek into everything that we do during the day. But this is the point that I want to make here. When we talk about trades, because everybody in the community has different dollar amounts, risk tolerance, education, we base the trade idea on $500 risk per trade, but then everybody allocates the same thought process based on how much they're actually willing to risk per trade. But the volatility is what matters here. So you can see a $500 risk with a $5.50 stop loss translates into 91 shares. So essentially what we're doing there is we are adjusting the share size. We're adjusting the position size to compensate for a much wider stop loss. So we're never risking more than the dollar amount we're okay, regardless of whether it's a $5 stock or a $500 stock. I'm telling you right now, if that's a new subject to you, I strongly recommend go back and watch that, write down, take notes, and think about it. Because a lot of traders mistakenly trade the same full share size all the time, regardless of the stop loss. Now, raise your hand if you've ever had a good trade where it was fluctuating around. You did all the homework, it's going around, and you're shaking out of your shoes because of the volatility. You get stopped out because you're the scared money, and then you see the thing fly and do exactly what you thought it would do. Raise your hand. I know I did that early in my career. But once you understand having the proper risk on a trade, meaning dollar amount first, so you need to know what dollar amount you're willing to risk that you're comfortable with, then you get share size based on the difference between your entry and your stop loss. So again, it doesn't matter if it's a $5 stock might have 1,000 shares, a $500 stock might have 100 shares. Either way, you're still risking the same dollar amount. So when we're talking about a $20 average true range in Tesla, you can still trade Tesla, but you're going to adjust your share size based on the risk for that trade, the dollar amount risk first. So that's the big thing I want you to get across here, though. So again, if I bring this in, I'll just give you one more glimpse of what it's like to be on the other side in our community. Again, we got a lot of questions about this. I'll put a link below if you want to learn more about the boot camp. But we do give every single entry, exit, stop loss from start to finish in every trade. And there's a reason for that. It's because I want you to learn. I want you to understand for me what it means to be a professional trader, and the entry, the exit, the stop loss, the position size, when we add, when we adjust. I give you all of that because I want you to develop the habit of how to do that. It's life-changing when you understand that every trade is not the same. First of all, if you think every trade deserves the same risk and the same position size, that simply means that you don't have an edge. Once you have the edge, then you just need to understand how to determine the order flow and read the tape to determine profit potential. And that's actually pretty easy to do It probably takes about a week or two to understand how to read the order flow and how to read the tape. The last part after that is up here. The last part of after that is actually understanding how to manage what happens between entry and exit and work those positions so that you keep your losses small and you understand how and when to hold the winners. We actually had a big winner last week in that stock that I just showed you. We ended up taking $9.50 on the trade in just a day and a half. And we actually got out of the trade a little bit earlier than we might normally do that because of what we saw reading the tape in the market. And you can see the market's actually rolling over a little bit today. So I just can't express strongly enough. If you're new to the markets, and especially if you're new to stock trading, watch what we just went over. It's about 25 minutes into the video. Again, if you can visualize that, whether it's $5 or $500, that doesn't matter. What matters is you going into the trade first, saying I'm willing to risk 200 or I'm willing to risk 100, whatever the dollar, 1,000, whatever the numbers for you. And then you adjust your share size, your position based on the volatility. So we just walked you through how to find that volatility in Finviz, and I'll pull that up on the screen. Whenever you type a stock in, you go over here to the average true range, and it will tell you what the stock normally does on average from the low to the high. So just to recap today, Bitcoin is still very volatile. Tesla actually had a lot of order flow and institutional attention on Friday. We're looking for follow through in Tesla. If you missed the news story, Tesla drivers now have now got that button, the self-driving button now. They have a choice to hit that. So Tesla became very interesting. Oh, the one thing we didn't want to talk about today, I want to go back out to the screen, which is the Chinese electric vehicle stocks. We also talked about Roku. Roku is a big idea that a lot of people have been discussing, and we said it's not in a confirmed reversal yet, but the story is interesting. There's a news story out on Roku expanding into Germany today. We also talked about the get out of the house stocks, the recovery stocks. At LYV is there. And you know what? Financial stocks. American Express exploded last week, as well as JP Morgan, and those stocks that are actually going to be in the game plan this week as well. So there's a lot going on, but I want to finish up with the Chinese electric vehicle stocks, because obviously the China stock market right now is a little bit uncertain, for lack of a better way of putting it. And that's obviously affecting these stocks as well. You can see for a better part of a couple of months, incredibly obvious. But then once some news came out, the stocks just continued to move to the downside, broke the trend here and did not bounce up. So now we're actually going to reestablish a new downtrend line for NEO, XPEV, and LI. Those are the top three that we're watching in this sector right now. So I want to be clear. For me right now, these stocks, if they have a lot of activity, remember, we just talked about liquidity and volatility. We measured that by average true range and average daily volume. And I gave you the numbers that I normally look at. Average true range, $1.50. Average volume, minimum of 2 for me personally. LI, XPEV, and NEO are in my list every day to actively trade as a day trader, but they're not swing trades for me yet because they're still in confirmed bearish order flow. So again, these are the little things where, you know what? I think it's gone down too far. I think it was 35 a month ago. Now it's 20, and now that means I should be buying it. And I keep doing that, but I can't express this strongly enough. Because a stock has fallen quite a bit does not make it a buying opportunity. And I'm going to leave you with this one because it's a pretty interesting one. Because somebody in our community last week, actually, heading into earnings for this stock, made the argument, and a long argument, about this and this and this and this. And because it's fallen, it has to go higher, which is just not a good argument. It's not a good justification for taking risk. Now, again, remember, everything we do is a posted paid moment so that you become the reason you wake up every day expecting to make money. You need to learn how to build arguments for great ideas. So this particular person, and again, he's a member of our boot camp. We walked through the whole argument, and said that's not a great argument. So the stock we're talking about is FedEx. FedEx, prior to earning, he wanted to buy the stock because of how far it was down and what it's done recently, and it has to rally. I got news for you. It doesn't have to. As a matter of fact, it's still clearly in a confirmed downtrend, and we'll take a look at the stock. And this is a big deal because the reason I'm bringing this up, okay? The reason I'm bringing this up is learning how to avoid situations where you can't justify buying the stock. Keeps money in your pocket. Then the other side of the equation is now that you're not digging yourself out of a hole, you are now understanding how to net money, and it's easier to see your account grow every month. So if we take a look at FedEx, and prior to the conversation, and if we'll just add the earnings on there, so events and earnings. So you can see here, FedEx just prior to earnings, this was where the stock slowed down, and basically the conversation was heading towards, I want to buy it because of the stock being down. And you can clearly see the stock is still in bearish order flow in a big way and broke this support level. So this is the deal, from 250 down to 220 and change. So because we had this conversation prior to earnings, because we had this conversation and we helped him stay away from the stock and bottom fishing, because the argument of it has to go up because of how far it fell, that's not a good argument. So the member of our community stayed away from the stock and kept that money in his pocket, and now he was able to, with a clear head, look for other opportunities. Same thing can be said for Sava, S-A-V-A. There was a lot of news, if you read Investors Business Daily last week, about Sava, over the weekend, actually. Sava's been in play. We've been day trading the stock quite a bit, but if we go out to the chart of Sava, because Sava Sciences, when this move happened over here, there were a few people saying, oh my gosh, it was 125 last week, now it's 70, and I really need to get in there and buy this stock because of how far it fell, and I really liked it last month. That's not a justification for buying and taking risk. You need to learn how to read the order flow, read the tape, read the volume, and then come up with ideas and justify putting your hard-earned money in the way. So we stayed away from bottom fishing that FedEx trade. So the community helped him come up with that argument. Sava, we were not bottom fishing. A couple of people were looking for that at 80, and we said, no, there's no reason other than you feel like buying it. The stock collapsed another $35 over the next week. So again, we stayed away from that opportunity as a swing trade. Now, last week, and again, this is a part of doing the game planning, we've been actively day trading Sava in the community because it bottomed out. It's not a swing trade yet, but there's been plenty of active opportunities in Sava, and it's actually up again this morning. So we're still waiting for that confirmation and the weekly charts to go well bid, which it kind of did, but still a lot of news out on the stock. If you read the article in Investors Business Daily this weekend, it was pretty interesting. But anyway, the point that I want to end up with here today, I have to leave because we have to head over to our other game plan meeting. And actually, I think Winnie actually brings it up here in a big way, is Enron didn't recover. If you were trading back in the day like we were, Enron, WorldCom, all those stocks never recovered. And I'll leave you with this story, which is a 100% true story. The worst thing you could ever say is, I know the stock, okay? And I'm going to tell you why. When I had my firm in New York City, we had this guy whose parents were lawyers, okay? His parents, not legally, personally, were friends with this husband and wife who owned a public company, and they knew the stock and they knew the owners of the stock. And I won't forget this ever because it was a big lesson that I hope you take today. They started buying the stock, or actually this guy in my office started buying the stock at $21, and it went down to 18, and it went down to 17, and he kept buying the stock on the way down. I know the stock, and it went down to 15. I know the stock, and it kept going down to 14. Ultimately, he ended up puking the stock up at $4 after he knew the stock. The only thing that matters is the tape. The only thing that matters is the order flow and being honest with whether or not you see bullish order flow and a clear tape to start getting long. You have to get your emotions out of the equation. You have to get your opinion out of the equation, which is something that's a big deal. You don't want to have an opinion on a stock because opinions are hard to change. You want to build an argument that justifies accepting risk, and that's what great traders do. The next level for great trading is understanding when to take more risk because the deal justifies it because you built an amazing, amazing argument. That might be in some of the financial stocks this week. They're a little bit overbought at this case. So what we're looking for in the financial stocks now is to rally, pause, and then we're looking for the next move. 106 is the area we have an alert set for Morgan Stanley if you want to get ahead of the game on that one as well. Let's see. All right. If anybody's new to our community, obviously you have to email customer service at support. So Robert Ryan, make sure you get out there to support. Jason Mills, stocks do not revert. Yeah, that, you know what? That's actually an interesting comment there too by Jason. There's a lot of traders that use Bollinger Bands and that kind of stuff, and they work very well when the market's not trending. When the market's trending, they'll be careful because overbought can remain overbought, oversold can remain oversold. So we actually, yeah, GE is another one. That's exactly right. That's exactly right. So again, we want to leave you with that. We looked at a lot of recovery stocks today. We talked about Tesla. We talked about Roku. Solomon's getting ready to leave because the meeting's over. We're going to leave you because I actually have to head on over. So again, there's a lot of videos below here. Make sure you click on those videos and make sure that you get in there and be part of our Facebook group, because we have a lot of people that take the leap and join either our swing trade program or our boot camp. And of course, that's a lot more access to us with the date, with the entries and exits and all that kind of stuff. But if you want to stay on the social media side, obviously, I love having you here with us on YouTube. Click all the way down into the description, and you'll see the link to join the Top Trading Pros Facebook group as well. So, look, I hope you come into the boot camp because that's where we really get personal. If not, have an awesome, awesome day, and I will speak to you soon. We covered a lot of stocks today. You probably want to go over this a couple of times. Have a great day, everybody. I have to take off and head into the other meeting. Thank you for joining me. I really appreciate it.